Good afternoon and welcome to the Accendo Traders Group. This is our weekend wrap-up report for June 15th, 2008. AccendoTraders.com, effective trade plans delivered daily. And as we look through our routine of how we prepare ourselves each week and how we alert ourselves of any market-moving news, or as we look at the trends and find out what sides of trades we might want to be on depending on the sectors, we obviously want to take the time to wish everybody a happy Father's Day. My dad, Herman Glass, happy Father's Day, Dad. I love you. And I appreciate all that you've done for me. And hopefully someday I can live up to be as good as a father for my children as you have been to me. And I also want to take a quick moment just to acknowledge the passing of Tim Russert. Certainly, just shocked the heck out of me during this presidential primary. Certainly, appreciate all of his commentary, and he's obviously been the leading figure in the politics over the last, 1991, I think it's when he took over Meet the Press. Anyway, I just want to acknowledge that great man. Definitely felt like he was a fair man, no matter what political side you're on. This week, we basically had a blah week, but it was a roller coaster week because we went down and up and down and up. You can see that the Dow was up 97 points and S&P was down 0.65 and NASDAQ. So really, just a blah week. The financial sector did control the beginning of the week once again. Lehman Brothers pre-announced their expected loss, and then their CFO and COO lost their position. And the funny thing is we got an upgrade on the financial sector, the banking sector, broker sector by Morgan Stanley. Isn't that, a bank upgrading a bank? That's interesting. We had some Fed speak regarding inflation, and again, it's no longer the fact that the Fed's not cutting. We're now entering a period where it feels like a rate hike is anticipated. And you can see that the Fed fund futures right now is at a 50-50 for a rate hike at the August meeting. CPI basically was a rally point because it wasn't as bad as it was thought to be, especially with some of the Fed speak and some of the leading indicator reports. So we rallied off of that, and we'll talk about that when we get to the shadow trader. There was some merger acquisition news. Anheuser-Busch has a cash bid for its company, $46 billion, and of course that led to a lot of conversations that I saw this week, because as the dollar is weaker, a lot of these American companies now look like a good buy for these foreign investment companies. And, are we going to lose these American companies to foreign investment? And, with Anheuser-Busch, there's a lot of historical and state treasures there, national treasures there, not just the beer, obviously, but some of the buildings and real estate that they own. So, again, as the dollar is this weak, how does that affect the global economy? This week, we got some more inflation data coming out, and not a lot as far as just regular economic data. What I do want to point out on the earnings front is that we've got Goldman Sachs, Best Buy, Morgan Stanley, FedEx, Circuit Cities coming out this week. Nothing tomorrow, but we do have some biggins coming up this week, and certainly Goldman Sachs, I believe on Tuesday, will have an impact on the market. So let's go ahead and take a look at the sectors and see which ones are bullish and which ones are bearish. Okay, so as we begin to look at our sectors, we really have a mixed perception where the market's really not leading one way or the other. We're kind of 50-50 here. First up, let's skip on over here to materials. And you can see by definition, we're definitely still bullish. Nice bounce off the 50 here. It happened here. So hopefully we can see the same thing here. I wouldn't go bullish, though, until we get above these moving averages here. So when we look at our flag list and new stocks, we're going to look for that also to see if we need to get above the moving averages. But by definition, basic materials are still bullish. Casinos, still bearish. Certainly broke another support level here, so casinos are bearish. Coal, also bullish. You can see we're kind of forming a ascending wedge here, so we probably want to break this level here for us to really go off bullish. We got ACI, PCX, CNX, BTU, but by definition, coal still bullish. Negative on is banking sector certainly looking weak. starting last week with all the Wachovia information, and then the CNBC analyst last Friday, not Friday that just passed, but 2 Fridays ago. So banking certainly looks weak. Pharmaceuticals. Let me go down one more. Pharmaceuticals definitely looking a little bearish, broken another key support level here. Internets are in between. I guess you could say by definition they're bullish, but they did break the 50 and they closed right back at the 50. So if we can get back above the 50 and the moving averages, I consider getting back bullish on internets, but I'm holding off for right now. Gold, you can see is back at a key support level. If it breaks here, definitely go bearish. Software, looking bullish. Nice bounce off the 50 here. Certainly more conservative entries up here at 214, but we are getting above the moving averages. So software is bullish. Insurance is bearish. Oil services also bullish. Oil may be retracing a little bit. Stocks, by definition, somewhat bullish. Like the internets, like to see to get above the 50 before I go all off on them. Brokers are kind of blah, so we'll see what happens there. Still bearish though, because you can see the downtrend. And natural gas is bullish. Okay, as we begin the education part of our video, we're using the book Trading in a Zone by Mark Douglas, and we're on chapter 3, Taking Responsibility, Shaping Your Mental Environment. And when we last met, we were talking about the ability to trade without fear. We're talking about when you have a trade plan in place, when you have a system in place, you're able to make educated decisions, and you're no longer allowing yourselves to be susceptible to these fear-based errors that tend to cause us to lose money. You're no longer rationalizing, well, it could go back up. Well, is that a doji or is that a falling 3? Or you're no longer distorting information. Well, this earnings report is good. And how many times has that happened, that the earnings report is good, but the stock goes down? Well, sell the news is the old adage. So when you're now able to say, here's when I buy on this chart pattern, on this trade indicators, technical indicators, you no longer will fall susceptible to please go up, because according to your system, I sell here. My stop is automatically enacted here. Having a plan in place allows us to avoid all of those fear, irrational, emotional decisions that we make. However, he goes on to say that is only half of the equation. The other half is the ability to develop restraint, meaning once you're consistent and once you start making you're profitable, you now need to have the restraint to not just go off on a trading frenzy. So if we start from the premise that consistent trading focuses on the development of their mindset, then that's kind of obvious now why many traders fail. He goes on to say that a lot of people think that, well, the more I learn about the market, the better trader I will be. And it's not the more that you learn about the market, it's the more that you learn about yourself. And, we've talked about this often and often about how, so many times when we're losing or we have bad trades, instead of focusing and redeveloping our tools and redeveloping our trade plan, what we do instead is go learn a new system. Or we go read a book about the stock market, or we go learn a new indicator, or we learn, we go from the stock market to options, or from options to Forex. And, but in changing all these systems, what have we not changed? We haven't changed how we think about the market, how we interact with the market. So, we're still doomed to make the same errors because we haven't changed our mental structure on how we interact with the market. So he ends with losing money and the tendency to become reckless when you're feeling good that causes most losses is not about technique. It's not about market knowledge. It's about yourself and how you mentally interact with the market. So, to get the full version of our weekend rapid report, there's our podcast list, accendotraders.com/subscribe to podcast HTML. Subscribe podcast HTML is how you can get the full version. A lot of people have been saying, I say every day effective trade plans delivered daily, but I don't always put this on YouTube. Well, that's right. To subscribe to our newsletter, AccendoTraders.com, buynewsletter.html is the link to subscribe to it. Our weekend rapid report will always be free and will always be available on YouTube, MySpace, wherever. But we do have a daily podcast, a daily trade plan that's available via video. And we always appreciate the feedback. We got a couple this week. And go to our blog to read more about trade plans, and there's going to be some technical indicator stuff on there. I'm almost done making the revisions, so that should definitely happen this week. And as always, trade at your own risk. Thanks, guys, and I will see you tomorrow.